And now for our next news special report.
And now a revelation you quite literally can't afford to miss. Across the nation, a silent alarm is ringing, and your financial security is on the line. We're facing a tidal wave of debt, credit cards, auto loans, and the almighty mortgage, and it's about to crash over Main Street America. Interest rates are skyrocketing, and the national debt, it's a number so astronomical it defies belief. This isn't just an economic update, it's a red alert. As we peel back the layers on this crisis, you'll see just how close to the edge we really are. So don't touch that mouse, because by the end of this report, you'll need to know what to brace for. The final word on this is so crucial, missing it is not an option. So stay tuned. Now, America is facing a formidable challenge, one that goes to the very core of our financial stability, a banking crisis that threatens to unhinge the economy that so many hardworking citizens rely on. The numbers speak for themselves, and they're shouting a warning that we cannot afford to ignore. On Tuesday, we got a report that should send a shiver down the spine of every taxpayer in this country. The total amount of credit card debt in the U.S. has now reached a new record high of $1.08 trillion. That's trillion with a T, folks. It's not just a staggering figure, it's a historic one, signaling an all-time high we haven't witnessed since the last century. Credit card debt has always been a quicksand for many, but now the banks are pressing their advantage. They're pushing credit card interest rates to unprecedented heights, with the average credit card annual percentage rate, or APR, hitting a new peak of 20.72%. So just think about that. If you owe $5,000 at this APR, it would take about 279 months and $8,124 in interest to pay off that debt, making the minimum payments. It's a dire situation that's trapping Americans in a cycle of debt from which it's nearly impossible to escape. But it's not just the plastic in our wallets that's the problem. Auto loans have seen a $13 billion climb, and student loans have surged by $30 billion. Mortgage balances, they've soared by $126 billion. Our national household debt is now towering over $17 trillion, and these aren't just numbers. They are chains binding the average American to a future governed by debt. The term downsizing America is becoming a reality. Kevin O'Leary wasn't pulling any punches when he said that. Because of higher borrowing costs, our homes and cars are shrinking in size. Watch.
You know, just 3 years ago, even 24 months ago, you get a mortgage at 4.5%. You're lucky to get one at 8 today. So that means the size of the house you're going to buy is 20 to 25% smaller. That's a downside. You want to borrow for a car? Sorry, that's 8 to 9%. Used to be 5. So smaller, less expensive car. That's happening at the same time. And also, you really have to think about where you work. If you're going to spend a lot of money driving, you're going to pay a fortune in gasoline, because that's moving back up. Looks like we're on our way back up to oil between $90 and $100. These are all political issues, but the truth is, if you take interest rates up in this unprecedented, from basically nothing to 5%, 5.5% now, and on its way likely to 6, which means the lending rate's more like 9, it's going to hurt somewhere, and it means your lifestyle, if you're in your early 20s, is going to be about 20% less. Sorry to tell you the truth, but that's what I do all day long, and that's the way it is.
Kevin. It's a sobering picture of the American dream getting downsized right before our eyes. Our corporations are staggering under the weight of their own debt burdens, with corporate debt at the highest level ever recorded. And state and local governments, they're borrowing like there's no tomorrow, putting essential services and community stability at risk. However, the most significant and worrisome debtor of all is the federal government. With a national debt clock ticking past $33.6 trillion, it's a glaring signal that our spending habits are unsustainable. This isn't just a problem for the next administration or the next generation. It's a crisis unfolding right now. Let's take a moment to digest a staggering fact from Bloomberg. The annualized interest payments on our national debt have blasted past the $1 trillion mark. This is money that could have been invested in education, infrastructure, or healthcare, but is instead being siphoned off to service the debt. The implications are clear. We're spending more on past excesses than on building our future. And adding to this financial drama is a technological glitch that has left countless Americans unable to access their paychecks, struggling to make ends meet. This isn't a mere inconvenience. It's a symptom of deeper systemic issues within our banking system. Can we really attribute this to a simple human error, or is this indicative of a system straining under the pressure of its own complexity and the demands of a society living on the edge of its means? We are indeed facing a credit crunch, a tightening of the financial noose that could choke the life out of economic growth and prosperity. The credit crunch is a storm on the horizon, one that's begun to cast its long shadow over American households and businesses alike. When credit dries up, the consequences are immediate and severe. Homes aren't bought, cars aren't sold, and businesses can't expand. It's a domino effect that can cripple the economic engine that powers our very nation. This crisis is no longer looming. It is here, and its tentacles are reaching into the wallets and bank accounts of ordinary citizens. The dream of financial freedom is becoming more elusive as the chains of debt grow heavier by the day. We've seen this pattern before, where the excess of the few leads to the hardship for the many. The housing crisis of 2008 was a stark lesson in the dangers of unchecked financial adventurism, and yet here we stand again at the precipice of another potential disaster. The question is, have we learned from our past, or are we doomed to repeat it? The stark reality is that the American economy is built on the foundation of consumer spending fueled by credit. When the foundation is shaken, the entire structure is at risk. We're at a crossroads, where the decisions made by financial institutions, lawmakers, and regulators will determine the path forward. Will we continue down this precarious path, or will we take the necessary steps to shore up the foundations and secure the future? It's not just about economic policies or financial strategies. It's about the trust that the American people have in the system that's supposed to safeguard their prosperity. When that trust is eroded by soaring debt, predatory lending practices, and a banking system that seems more fragile with each passing day, the very fabric of our society is put to the test. As we navigate these turbulent waters, one thing remains clear: transparency, accountability, and prudent financial management. They're not just buzzwords. They're the lifeboats that keep us afloat. We must demand these from those at the helm before it's too late. So where do we go from here? Well, it's a question that each of us must ask ourselves as citizens and stewards of this republic. The path to financial solvency is not an easy one, but it's a journey we must undertake with determination and foresight. The alternative is a future where our financial sovereignty is not assured and the American dream is but a distant memory. My fellow Americans, this is not just another story in the news cycle. This is a clarion call for action. It's time for us to roll up our sleeves and tackle this crisis head on. The banks may be the beating heart of our economy, but it's the people who are the soul. It's the people who will ultimately decide the fate of this nation. If you got value from this report, tap subscribe. We need a well-informed populace ready to make the tough decisions, and that starts with staying informed. Keep watching, keep questioning, and keep fighting for a republic that lives up to its promise of prosperity for all. Now here's the unvarnished truth, America. Our financial system is skating on thin ice, and it's starting to crack. Every tick of the national debt clock, every surge in interest rates, every glitch in our paycheck deposits, it's all part of a larger, more disturbing picture. The days of assuming your money is safe in the bank could be winding down. We're staring down the barrel of an economic catastrophe that could redefine our way of life, and it's time to wake up. The storm clouds are gathering, and the forecast is dire. Prepare, America. Educate yourself, safeguard your assets, and get ready. The unknown looms large, and it's closer than you think. Make no mistake, the bell tolls for our financial security. The question, though, will you heed the call?
Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.